Good afternoon, everybody. We are very warm welcome to this webinar that we are doing on the payments in India, Look Back and Look Ahead. This is being organized by FICCI and CedarIBSi. I'm happy to be a part of this, very important session that we are doing on digital payments today. This is a subject which has been a clear priority for us and the FinTech committee that FICCI has been working in this area for quite some time now. In July 2017, FICCI did a conference on digital payments. This was in collaboration with NETI Aayog within a year of demonetization, when we had seen major digitization boom in the country. And now, as we have completed about 5 years, we see that Indian digital payment space has seen extraordinary growth in last few years, with the volume of transactions increasing at an annual growth rate of over 20%. And this, coupled with the, of course, launch of new and innovative payments products, have firmly placed the digital payment industry on a upward growth trajectory. As the digital payments landscape is maturing, RBI's regulatory attention is shifting to the next level of reforms, including the introduction of retail digital payment solutions in offline mode, enhancing transaction limit in IMPS to 5 lakh rupees, geotagging of payment system touch points, tokenization of payments, etc. And merchants form a very important, a cog in the digital payments ecosystem in India. And they are a very heterogeneous group, and isolated acceptance solutions like only cards or only QR will find little relevance in this new digital age. Industry's focus should be on providing merchants with an end-to-end acceptance solution covering cards, NFC, pay by link, QR, UPI, micro ATM, etc. All under a single account with one point of contact for support. And industry indeed is moving in that direction. There's a lot of architectural change that is happening at a very quick pace. We also do see an opportunity in the manufacturing space for acceptance infrastructure. FICCI and PwC had jointly prepared a detailed report to highlight the possibilities on offer for manufacturing POS terminals in India, as well as outline the support required from the government to boost the domestic manufacturing ecosystem in this space. The report was submitted to the government earlier this year. In fact, we are working with METI as a first part to look at the local content in this space, so that might give boost to this industry, hopefully. And also earlier in this year, we had worked in collaboration with the Better Than Cash Alliance, and we organized the Merchant Digitization Summit 2021. This was under the guidance of Department of Economic Affairs, Finance Ministry, as they're very keen to promote usage of digital payments, particularly amongst the women merchants. And we are working with our industry partners from the payments industry to contribute towards this effort. And of course, while the digital payments have become instantaneous within the country, we are seeing a lot of interest in promoting seamless payments across borders as well. Recently, as part of our FICCI Expert View series, we hosted colleagues from some of the consultancies who shared their insights on central bank digital currency, the current state and outlook. And this was, I think, it was very well received by all the participants. And there are many other facets related to digital payments that we continue to explore within the ambit of the FICCI FinTech Committee. So obviously today's session is also a part of the initiatives that we've been taking in this space. We're thankful to Cedar Management Consulting team for this joint handover today. Cedar does bring in a lot of experience on this subject and many other related areas, and I'm sure that we all will benefit from the deliberations. With these words, I'd like to hand this over to Mr. Ramkumar, a senior partner, Cedar Management Consulting. And thank you, Ram, for this initiative. Maybe it's just a beginning, and we look forward to having more such collaborations going forward. So over to you.
Very nice of you, Jyoti. Thank you so much for kind words and a very interesting introduction. Before we started the session, you were talking about the impressive, show that FICCI is actually organizing at in Dubai at the Expo 2020. So all the best for that. Thank you again for this opportunity. Folks, welcome to this very interesting panel today. It's obviously a very important agenda and a very interesting topic hosted in the FICCI CedarIBSi platform. So the topic today we are talking about is in payments in India with both a look back and a look ahead. I guess more of look ahead than look back, but it's important to still have the look back. It's been a phenomenal journey over the last, let's say, 5 years. To talk about that with us in the panel today, we have with us Ashish Katkar. He is the founder and CEO of Verinite. Ashish has been 22 years in the payments industry, previously with erstwhile Canbay, now Capgemini, and with Atra. Ashish, I love the way you articulated your goals at Verinite. Customer delight, people delight, and shareholder delight. I mean, that's very interesting the way you coined out, and congratulations for the 10th anniversary of Verinite, a decade in payment industry. That's indeed amazing, and congrats again on that, Ashish.
Thanks, Ram. That's very kind of you. Thank you.
We also have with us, Suresh Rajagopalan, CEO of Wibmo, Nasper's PayU FinTech. Suresh and I go back, 25 years. Suresh has been in the industry, banking, technology, and payments industry for more than 30 years. He worked with various banks across different countries, and I've actually had the pleasure of interacting with him, in the UAE, in Qatar, in Egypt, of course, and in India. Before his current role, he was president of retail payments with another payments firm in India. I was just looking up, Suresh, and I didn't realize that you were your topper at St. Joseph's College, which happens to come from the city I hail from as well, Trichy. So it's a pleasure to have you here again, Suresh, and thank you again for being part of this panel. Yeah.
Thank you, Ram. Nice to get connected again. Yeah.
And with you is the moderator, which is myself, Ram. My name is Ramkumar. I've been in the industry for about 27 years, 20 of which with Cedar. Cedar is, as many of you would know, is a management consulting firm and also happens to be the parent firm of UK-based IBS Intelligence, which is highly recognized for its financial technology, research, advisory, and publications. So with that, let me quickly jump into today's agenda. What we will do is we'll have a quick introduction about what's happening and just setting the context. I'll make a small presentation. But the more important part and interesting part of the discussion today would be a very engaging panel discussion, which I'm looking forward to have with both our panelists here. You would be, as audience, be also actively engaged. Be ready to actually keep your fingers ready to poll on some of the questions we're going to ask you. And we'll also have a session towards the end for audience Q&A, right? So why don't we jump into a first poll before we jump into a presentation? So can we have the first poll, please? You could see the questions popping on your screen. I'm assuming all of you can read this. What, in your view, would be the most important driver in getting digital payments, the rise of digital payments in India? Is it UPI and cashless and cardless transactions? Would it be improved security? Is it the regulatory framework? Or is it the pandemic impact? While we wait for the responses, we'll give another 30 seconds for the poll to close. Okay, I could see the results here. There is an overwhelming response in favor of UPI and cashless, cardless transactions. More than 70% of the audience seem to be convinced that is indeed the primary driver. It's not necessarily the only driver, but should I say the primary driver there. So without further delay, why don't I jump into a small presentation that we will actually have before we jump into the panel discussion here. Is my screen visible, Suresh?
Yes.
Excellent. Okay, so what do we, why is this topic so important today, right? Just look around you. I mean, if you had to pick the paper every morning, it's impossible for you to not have read at least one of these, interesting topics that, is around us, right? It's in front of us, around us, everywhere. It's interesting to see how each player in the industry, including, the firms represented in the panel here, have actually been, making news for a lot of stuff that's happening around the payment space. And today, I guess we will have a little more insightful discussion, maybe a one-on-one for people who are actually looking to also learn about where things are heading. Yeah. So let's talk about a little bit of a global perspective, and then we'll move into the market timeline from an Indian context, and then the trends and way forward. This is just to give an overview. What's interesting is, if you look at the payments transaction value, from about 1 trillion in 2011, we now are operating, roughly about twice as much, more than twice, and then the estimated, the transaction value is about $2.7 trillion of revenue, payment transaction driven revenue in the next, let's say, 2 years. And what is also interesting is that Asia and Africa are drivers in driving this growth, which is very, very interesting. Now, if you look at Indian context, Suresh, you were mentioning the other day about how NFS was launched way back in 2004 and NPCI in 2008. So we had them, the Payment and Settlement Act created long back, but we did see a lot of action since the launch of IMPS, PPI, RuPay in 2010. And then we all know the demonetization happened. It was a strong impetus, which then obviously helped also in driving a lot of action, besides, of course, the launch of UPI and NETC and Aadhaar-based authentication. COVID, obviously, for all the dark cloud of COVID, one silver lining was it created a lot of, digital transaction volume, 2.2 billion UPI transactions worth almost 4 lakh crores as of December 2020. And as we speak in 2021, we have just crossed the milestone of $100 billion, roughly about 7.7 lakh crores worth of UPI transactions as of October, which is in no, by no means a small number. It's significant even from a global scale. Yeah. Now, if I was to look at, the ecosystem, and, for most of us, some of these terminologies will actually be important to absorb through the next hour or so. Besides the cards acquirers and processors and card networks and issuers, we have a whole gamut of payment gateways and aggregators and PSPs and payment hubs, besides the digital wallets and, of course, the good old remittance, all forming a part of the ecosystem. So we do have a lot of players, some of them wearing multiple hats, in the ecosystem as we speak. And that also has resulted in, as you can see, India taking a leapfrog in terms of its transaction value. I mean, it's estimated to grow at 33% from what it was in 2010 to what it is likely to be in 2025, $700 billion, significant even from a global scale standpoint. And what's fascinating is only half of that is from the financial services. Another half is driven from e-commerce and insurance and a lot of other non-financial contributors, right? Now, trends, and this is just an initial thought, and we'll obviously pick the brains of our panelists on these trends, but what we see as trends clearly is the QR, QR and cards and contactless payments. I'm sure most of us in this webinar today must have watched that famous, social media post where someone is actually having the bull with the QR code and going around. So it's actually becoming really the viral, concept as we can speak. UPI transactions have crossed $100 billion, as we know. We are talking about the PUE. In February 2020, RBI drafted the framework for retail payments. We'll talk about that later today. We clearly are seeing emergence of super apps, payment super apps for ticket booking and banking, and a lot of apps coming around, which is also another key driver. And, globally, and not just in India, but we do see that, a lot of point of sale players looking to shape up the market on what is called as buy now, pay later, or BNPL, right? Quick view on way forward. in our view, I think, what we do see as trends that are likely to shape the way forward is clearly real time. I think the name of the game is convenience and real time. Technology obviously playing a very significant role in contextual payments. What does artificial intelligence enable? And clearly, we would be seeing a lot of B2B payments getting a facelift with a lot of payment gateways and institutions coming on play, right? So this is not necessarily exhaustive, but certainly, what we would think are important, that we need to keep in mind, right? So with that, I will request that the second poll be placed with our audience, please. And the poll goes as follows. Now, you did see some of those observations there, but it'd be lovely to know what, in your respective view, would accelerate the evolution of digital payment ecosystem. Is it the enduring shift of customer preferences, significant fintech proliferation? Is it regulatory landscape? Or is it likely to be the reduction in cost per transaction? Now, I'll give another 30 seconds. There seems to be a stiff competition between two of them there. Suresh, I could see you smile there. Well, I guess we need to close the poll. So 47%, almost half the audience, seem to be choosing the proliferation of fintech as the number one, factor. Well, so with that, on that note, maybe I think I should jump into the discussion with our fellow panelists. So why don't I start maybe with you, Suresh? If you could actually maybe help, share your own background in the payment industry, but more importantly, also talk about Wibmo and what impact it has been making in the Indian context.
Thank you, Ram. I think I think you summed up very nicely. Probably that slides should have been at the end of this session. But yeah, nevertheless, I think you touched upon very important aspect of how in the last 5 years India payment ecosystem has changed. I think it was I would just go before even 5 years back, thanks to this Aadhaar, then the Jam Trinity and all of that. I think the identity at the end of the day is a very critical element for payment. So in a digital world, you need to know who you are. So I think from that point of view, I think digital identity and making sure that ensuring that your identity is verified before the transaction happens is a very critical aspect of payment. So Wibmo has been sort of pioneer in that space. In the last 20 odd years, we have been in this space, especially on the authentication space or identity verification space. So today we are very happy to say that almost like 70% of the e-commerce transactions touch or pass through Wibmo ACS servers. So that's almost like 3 billion transactions per annum we process in a year. And like you said, I think the growth volume is almost like 35 to 40% growth year on year in terms of the the digital payment transactions. And again, the people view it differently for digital payment. What you mean digital payments is different from everybody. So in that context, I think the numbers is so high that people predict from consumer internet's payment spend is almost like 300 billion to 700 billion. I saw in your slide, because I noted down somewhere saying that it is $500 billion. So your slide shows 700 billion. So so it just like how it is changing. So I think the reality is we are accelerating at a very clip pace, and you're also seeing the adoption is thanks to many fintechs, payment facilitators, payment aggregators, and every sector is digitizing. So so we are very fortunate to be in the payment space. Wibmo is very fortunate to be in the payment space as part of the larger PayU ecosystem, and it has sort of given us the entire paytech space, not just from the 9 or 9 boxes which you have drawn, I think we operate in all those 9 boxes, just to let you know. So be it on the issuer side or an acquirer or running a largest payment gateway or running the identity space. So we cover all these aspects very well, and not just in India. And as we move across 30 odd countries and over 200 banks and fintechs we support on our identity and authentication space. But we'll cover more as we go along about payments and other aspects.
I was very conscious when I was showing that page, and I said, Suresh is going to make a reference that I'm not in one box, I'm in multiple boxes. And that's pretty true, right? I mean, it's very interesting how things have evolved, and there's a lot of gray areas, and the blurred lines are actually becoming more and more black and white. Ashish, I mean, it's fascinating to have you here because it's not just from the context of being a player, but actually you actually being a founder of being an important player in the industry, right? So maybe if you can share with us a little bit of your own background context and also about your firm, your organization.
Sure, absolutely, absolutely, Ram. I mean, it was pleasure hearing about Wibmo from Suresh himself. So, I mean, he put it right. And now coming to a little bit of a personal background, I've been around for 22 years. Have experienced this entire payment evolution in India since the time I entered the payment industry. So see, for all those years, I have primarily been on the technology side of the things when it comes to payments domain. So right from starting as an application developer on a very popular card management system, and eventually moving up the value chain to work closely with the key technology stakeholders from, say, banks or financial institutions, and helping them implement their key business initiatives related to cards and payments. So I've been very fortunate that way because personally, I've been part of 6 credit card launches in India, about 4 different transformation engagements that were undertaken by banks here. So this goes right from the time, say, HDFC Bank launched credit cards in India in 2002. So I've been fortunate enough to see that entire evolution. Now, it was 10 years back that I decided to turn entrepreneur with Verinite, and the whole focus of the company was all about helping these financial institutions, mainly in emerging markets, obviously including India, with their technology initiatives. So as a company now, we are exclusively focused on cards and payments industry. We work with, say, the banks, financial institutions, third-party payment processors, fintechs, even ISVs for their technology initiatives. In fact, today we work with 7 of the 10 card issuers in India, top 10 card issuers in India. We work with them, helping them on their payments related needs. We also work with fintechs in India of various kinds, whether it is a BaaS kind of a fintech, a payment infrastructure kind of a fintech, a neobank. So again, to help them build, maintain, or support their technology stack that they are building or in process of building or have built. And our service portfolio as a company covers the technology consulting, advisory, development, testing, support, and product engineering services. So we see ourselves as an important technology enabler for all the players that are involved in the payment ecosystem. So yeah.
Yes, I was just about to say very nice, and I realized it pronounces very close to Verinite. Yeah. So thank you again, Ashish. So back to you, Suresh. Now, I mean, we talked about the payment landscape changing over the last 5 years, and I know you are particularly very passionate about this whole balancing of customer experience vis-a-vis security, right? And we know that it has, as a concept, that has actually been, let's say, the fulcrum of a lot of what has happened in the last 5 years. Your take on how things have been and how they are right now.
Yeah, I think you touched a very, very, very important aspect, Ram. I think we had discussed this offline as well. I think, right, see, unfortunately, most of the payment industry ecosystem today revolves around identity, the way I explained to you, right? So the kind of identification related frauds and the fraudulent transactions are on the rise all the time, right? So one of the very important aspect for all of this is to make sure that how do we sort of protect that, so the consumer interest increases and the adoption increases, right? I think to that extent, I think we have come a long way. I think thanks to the RBI regulation and some of the regulatory requirements, force some of the two-factor authentication and also multi-factor authentication, biometric based authentication and all of that. So so it has evolved, like I always say, right? So if you are 100, right, systems are here to sort of scrutinize these 99 people who are very good and genuinely doing the transaction with a lot of friction, a lot of challenges, and whereas the 1% crook who gets away with whatever, right? So I think the systems are now changing and evolving to make sure that how do we provide a frictionless transactions? How do we genuinely take care of the people who are transacting? I know it is Ram who has been transacting every month on a particular day, doing a similar transaction, making his electricity payment, same time, the same amount range and all of that. If I know all of these data, why do you have to challenge him again and again and ask him to enter OTP and do a biometric and challenge him with more and more questions? So I think the industry and thanks to the proliferation of data which we collect and the amount of data and the device binding and kind of technology getting evolved, so we are able to see that frictionless transaction increasing. So which is the user experience at the end of the day is the cornerstone for payments, right? So if the user experience is pathetic, nobody is going to use this and adopt that. People have people have moved from the typical physical instruments like check and all of that because of the convenience. So if you going to challenge him more and more on this space as well in digital payments, the adoption will become sort of tepid. So we are looking at how do we provide a frictionless transaction flow, and so that the experience, like you said, in the last 5 years, it has significantly improved. Now, one of the factors with the RBI said is below 2,000 transaction. Now it is increased to 5,000 rupees transaction. You do a contactless, no need to enter PIN on the POS devices. Or if you take, for example, on the e-commerce transactions, you don't have to ask for a second factor. Now, there are also factors like tokenization and some of those elements which have come now recently. So it enables, gives the consumer the confidence to do these transactions regularly. So I would say that I think user experience is very, very key for the digital adoption. At the same time, you need a strong brake to drive very fast. So these fraud and risk managements are at the end of the day a very important ingredient. Maybe in the list, probably my answer was a good regulatory framework enables the the adoption very fast, right? So UPI would not have happened if there was no regulatory framework around that, right? So so there are many countries tried a similar approach, but here the RBI enabled it very successfully, and all the banks adopted it. So in that context, I would say that it's a play between banks, fintech, and the regulator, all of them working towards the common interest of the consumer and providing him a convenience. I think that has enabled the the acceleration.
Back to that comment of yours, Suresh, this everybody working towards the consumer. I think that's a very interesting point you made, and I will come back to you. But you had made another comment about how RBI had actually got the right thing going, and maybe also at the right time. And I want to maybe ask you, Ashish, about this right now. If I told you, or everybody in the world says, India is at the forefront of payments, both in terms of technology advancement and consumer adoption. Now, would you agree with that statement? Would you have a point of view on that?
I think it really doesn't matter whether I agree with you or not. I think your slide kind of already gives a view or opinion about it. So if still you insist on an answer, I'll say absolutely, Ram. I think there is no doubt about it. I think India has been at the forefront of global innovation in digital payments, and I think definitely it can lay a strong claim on both these aspects. that is technology advancement as well as consumer adoption. So there is enough data to back this up, and you had put it up already. So,
but I guess maybe a little more than that, if you don't mind. I mean, would you also be able to share why would that have happened in India better than somebody else? I think that's, just if you can actually give a perspective on that as well.
Absolutely, definitely. I think, I mean, looking at, I'll talk about, I think probably I'll mention the reasons as well. But I think if you generally look at all those digital payment channels that we have, I think right from say UPI or a Bharat Bill Payment System, even NETC, cards, I think we are seeing some phenomenal whopping numbers. I think you already spoke about UPI doing 100 billion for the first time in October, about 4.2 billion UPI transactions that were clicked in that month. And since the launch, it's almost 5 years now. So it was launched in 2016. It has exponentially grown since those 5 years in terms of volumes, percent, P2M kind of payments, which accounts almost are 40 to 50% of that, has become a preferred mode of payment for us as consumers as well, both online and offline merchants. So even apart from UPI, I think if you look at IMPS, that has also touched all-time high in terms of number and value of transactions. I think even from a cards perspective, that's something we've been doing a lot of work in. We've seen debit credit and both credit card numbers are really going up. I think in last 5 years, we have seen credit cards growing from 20 million to about 60 million now, and debit cards from say about 550 million to 800 million now. So the numbers are really growing up. Although on card side, I believe there is a definite scope of improvement. I think our card penetration is low, and that needs improvement, not only say from a numbers perspective, but from usage as well. So, so generally, I think if you look at any of those payment channels, we are really doing well. And even from a customer adoption standpoint, I think we are doing exceedingly well. Now you said what could be the possible reasons. I can easily point it out to 3 factors probably. I think it's customer, it's technology, and then the regulator. I think I think Suresh also touched upon the customer angle. It is all about convenience. It is all about feeling secure about conducting those transactions. So customer standpoint, I think obviously it was all fueled by the penetration of smartphones, tablets, wearables, and the data became so economical, it was cheap, and changing demographics as well. I think these are some of the reasons from a customer standpoint, which resulted into say a higher digital adoption. And also from a merchant standpoint, there were increased non-cash payment options that they were able to offer, whether it is cards, wallets, QR codes. They become a regular feature of retail shopping. So I think from a customer standpoint, these are few important drivers that cause this change. I think regulators also deserve a lot of credit in Indian context. I think they've been extremely forward thinking, thus allowing and promoting these rapid advancements from customer experience perspective, but also without compromising on the security. So I think RBI definitely has pushed a lot to growing use of these electronic payments and truly establishing a cashless society. And I think technology, we shouldn't forget that. Banking and telecom are 2 businesses which are heavily dependent on technology, and these rapid advancements that we have seen in last 5+ years, whether it is say growing adoption of cloud, API, microservices architecture, API-driven services, process automation, artificial intelligence, they are all helping to make payment processes leaner, more agile. So technology is playing a very critical or an enabling role in helping, say, evolve business models that would, I think, has driven the growth and will drive that growth in future. And I think I shouldn't forget is the banks, financial institutions and fintechs. I think all of them are now focused on providing integrated solutions. I think digital payments has evolved from being viewed as a cost center to a revenue center, and has become an important lever for customer acquisition. So these finance companies have stepped up their efforts to strengthen that payment infrastructure and have started offering, say, other adjacent services. It could be in form of lending, wealth management, micro insurance, and use of data analytics to offer more personalized or customized solutions for customers. So I believe these are 3-4 reasons which has truly contributed to India doing so well. All in all, I think enough and more data to agree with your statement. Yeah.
Just want to add, Bram, a couple of points on that. See, if you look at the number of SaaS companies have gone up, right? Because people, instead of spending on a capex mode, and the majority of this is now you can try it out very quickly, so and fail fast, probably doesn't work and you change, or the supplier is no good, you can change. So all of this is sort of gives them the confidence to launch a newer solution, right? New payment flows happens. So one of that, and second is that the cloud, because at the end of the day, like you said, the technology earlier, if you have to buy a platform, end-to-end is one aspect. Now those entire platform is broken down into microservices, and one other service can be enabled.
Correct.
Powered, right? So the ability of these 2-3 factors also added, and then last one is the cost per transaction, because at the end of the day, all of this is again helping the consumer to pay less for the transaction. So I think these are, as he articulated, these are very
moving away from being a cost center to a revenue center itself summed it up, right? But I guess across in the last 10 minutes, both of you have made references to, 4 different types of players, right? We are talking about banks, we're talking about fintechs and technology players, we're talking about the regulator, and we're talking about the consumer. So Suresh, if I was to ask you, if you were to look at the whole situation from their respective perspectives, and what payment landscape transformation has been and will be, how would you actually view from their perspectives, from a consumer's perspective, or a fintech, or a regulator, or a bank?
I think it's all of us. I mean, whether it is banks, fintech, and everybody is trying to work on the same consumer. So the consumer comes first. Like he was talking about customer delight or whatever. How do we make sure that the consumer comes first and he's at the center of what we do, right? So in that aspect, so how do you make how do you make the entire process of digital payments very contextual for the consumer, right? So if he is in a particular country, he can still do the similar transaction which he would do it from his hometown. Or for example, if he is in a different time zone but still operates and then completes the transaction which he would have done it in his regular time zone. Or for example, if you are using a particular device and you change the device and you still allow him to do. So the context changes for the consumer, but he completes the same transaction with a similar experience without sort of giving the siloed view, and he has a very unified view for his payment experience, right? So if you look at, I'm just narrowing the whole concept into a payments. If you take consumer payments, like anytime, anywhere, whatever we have been talking about, Ram, for the last 25 years, I'm sure you have made several pitches to me as well, and I have also done the similar thing. So all of us still, we are talking about anytime, anywhere payments, and how do you do that and all of that, right? So if you look at that, even today it is the same. It's the context, and the context, everybody, the payments becoming contextual, the authentication becoming contextual. So we are the whole amount of data elements and data-based, or using data to provide that kind of a service. And the regulator, earlier people used to tell regulator is like a cop who comes at the end of the movie to arrest a thief, right? So but here it is a very different. They are enablers. Today, the UPI is one such example, or the Aadhaar is one such example. It's enabled a new ecosystem to thrive. Now I'm very confident that the tokenization has come in place. So you will see further acceleration of payments. So so it is a very nice play between regulator thinking ahead and and see what needs to be done to enable these infrastructure to work properly for banks, and so that the consumers are safe to adopt some of these digital channels, be it even a simple USSD based mobile services to typical old Java mobile to the latest mobile gadgets to probably a new phone which could come in few more years to come. So one set of device ecosystem being supported, adopted, and facilitated in all aspects, be it in terms of manufacturing, in terms of support services, and security layer. And look at this from on the infrastructure side, the India stack was built, which is providing the cash plus consent layer, providing a consent for you to access your accounts, statement of accounts, and things like that. Phenomenal success, right? If you are enabling that account aggregation, or OCEN, which is the Open Credit Enablement Network, and things like that. So regulators are thinking ahead of the these many of these players, or they are at least working very cohesively with these large tech and then the banks in a way to facilitate the consumer's behavior, right? What I mean, like Ashish mentioned, today the credit cards growth today is shifting to buy now pay later because the number of credit card customers are less. So everybody is like how the debit card industry from card to account or pay by card to pay by account has come. Now the credit card payments are shifting towards buy now pay later, right? So again, the data driven, because the large amount of data is available to facilitate the easy credit or a low ticket credit without going to the credit scoring and all of that, and you enable the credit in a very safe. It is also a secure lending, by the way. It is not like unsecured lending in that sense. So it's a flow based lending based on the merchant receipts. You give SMB merchants lending. So the entire ecosystem, be it in terms of the banks putting that infrastructure, enabling the small fintech players and the SMBs to facilitate the last mile, which is the consumers, big tech players supporting the the whole data infrastructure and enabling that, and the strong, whether it is tech fin or a fintech, all of them doing the same thing in terms of enabling the consumers to do this job very in a very convenient manner and in a contextually, like I said, wherever they are and at whatever point in time they want to do the transaction, enable them to do. So I would put that, I think it's all three interplay is what more. It is not one against the other or one up against the other, but the whole, all three of them working in cohesion, and then you are able to get these output. And at the end of the day, consumer is in for the benefit because like I said, the cost of transaction is going down, the convenience is improving. And I would say that I think the days to come, you will see having one super app for bank to become one app. We don't need one super app for bank. It will become one app where I can access any bank account or any payment transactions. So that could become I don't know, it's sort of jumbo app or whatever, I don't know it's called. So we should see that actually happening very soon.
This is a lot of insights in there, Suresh. I mean, this is very interesting. And the super app comment of yours, I guess, is one day when the super app indeed happens, we will both remember today, 10th of November 2021. This interesting prediction.
Maha app or whatever you call it.
But I mean, while there is a lot of should I say excitement in the air, and it's interesting to also know about how these various stakeholders or players have made this happen, and it's actually all happening together. And let's assume that we want to sustain this momentum or grow this momentum, right? And you obviously have been seeing this, been in the industry for years, and you've seen how things have grown. But as they say, what brought you here won't take you there, right? So when we move from here and from 2021 as we look forward, if you were to pick one or two quote unquote success factors, right, that actually are going to be super critical to sustain or accelerate the momentum, and conversely, if you had to pick one or two potential impediments or challenges that you need to watch out for, what would you pick?
Right. I think Ram, I mean, before I come to say success factors, I think we are nowhere closer to achieving the full potential on payment side, which means I'm sure the payments industry is expected to undergo changes in few areas that which will help it to drive an already growing market. And each one of our payment channels, whether it is UPI, BBPS, NETC, has huge scope for growth in itself, even cards for that matter. And hence, obviously, there would be few success factors or critical success factors which will be important to sustain or grow this momentum. I mean, there are few that come to my mind, but if I have to pick a couple of them, I think first one, which probably Suresh alluded to as well and covered kind of during the first question, was the increased security for transactions. And I'll just add that probably increased customer awareness. I think growth of digital payments and participation of multiple players will require the security of transactions to be enhanced. Currently, phishing and wishing are not the only methods through which fraudsters target customers. The databases and servers of banks as well as the PSPs are being hacked. While we already have PCI, we have PA-DSS compliance for all participants in this payment ecosystem, but they still fall prey due to lack of implementation, open vulnerabilities, and redundant servers that are typically left unattended. And there have been instances very recently as well where customer data has been leaked through hijacking a server. It happened with a mobile payment solution company. And then such data gets sold on dark web and is used by fraudsters. So I mean, if I'm right, I think the fraud cases, number of fraud cases due to cyber attacks have doubled up in last 2 years, and average cost of losses is just going up. So I think security becomes important, and also education, increasing customer awareness. I think RBI and banks have taken several measures to educate customers as well as merchants about the importance of maintaining the secrecy of the sensitive data. And customers fall prey to some of these fraudulent activities, reveal personal details. And I think it's important that banks provide support during such instances. However, I believe there is strong requirement for written regulations when it comes to maintaining the privacy of customer information, and also increased security of transactions to prevent such fraudulent activities. So increased security of transactions and increased customer awareness for me is one critical success factor to see that growth. Another factor which is very close to my heart, just because we work with both, and I would say rise of fintechs and their collaboration with banks, I think could end up being an important critical success factor. I think India or globally, I think banks have conventionally served as gateway of payment services, but with the way the technology has advanced, I think this no longer appears to be the case, as monopoly of the banks in this area is gradually weakening. With India being one of the world's fastest growing economies, it's obviously become the fastest growing fintech hotspot as well. I mean, paperless lending, mobile banking, secure payment gates, mobile wallets, QR payments, and other concepts are already being adopted in India. And we also know that there is a huge unbanked, underserved population still there. There is a huge population which is underbanked. And obviously, for these very reasons, I believe that fintech has a huge role to play. They can enter the equation with their ability and power to fundamentally alter and transform our financial services sector. I think while the fintechs are rising, I think their collaboration with banks for, say, rolling out some innovative products, some customer-friendly products, will continue to boost the growth for digital transactions in this company. I think there are enough and more use cases for them to solve individually and together as well. So I believe these could be top two reasons that I would like to highlight could be the critical success factors. I believe even relooking at some of the regulations and looking at some new avenues could also play an important role to sustain or even grow the momentum. Now, coming to the hindrances which could probably impact or obstruct this whole story, payments growth story, I think again something which is close to my heart. I would say technology and operational readiness of the financial institutions and payment companies, that could be one important hindrance. see, what has happened is customers' digital expectations have risen, and that's an opportunity for financial institutions and payment firms. But what has happened is the readiness, operational as well as technology readiness, is not there. It's becoming very apparent that there is now need to explore new business models as well as revenue streams. So their priorities have to be very clear. I think technology transformation is need of the hour. There has to be push to reduce cost of payments. I think Suresh also covered it. Reorient from, say, a capex model to an opex model. Now that's absolutely possible with the advent of cloud, and there is need to build resilient systems, to cover those business and operational risks. Also ensure that you design your systems which are capable of handling capacity for the future growth of payment transactions. So that's something which would be important. And also another point about focusing on, say, monetizing payments data and evolving towards, say, value-added services. So technology and operational readiness of FIs, financial institutions and payment companies could be one hindrance. We are already seeing that. We've already embarked on helping some banks to ensure they're ready for this future. And I think, again, another point that I would like to reiterate would be improve data security. It's something which is of paramount importance for banks and financial institutions. The system should be implemented to ensure active monitoring to prevent those data security breaches.
You see security both as a enabler, a success factor, and also as potential impediment if it is not addressed well, right? I mean,
absolutely.
Fine, yeah, very interesting. And there is some comment also on the chat box that's challenging the view of super app, saying, look, I mean, if you actually were to look at super apps, it brings super security concerns. And Anurag is going on to say that blockchain goes the other way without having a centralized validation clearinghouse. It relies on multiple points. So maybe there's another perspective there. Suresh, you want to respond to that?
Yeah, I think it's a very important aspect. I think he is absolutely right. I think, today, if you look at the, most of the edge devices, they don't carry the data, right? Today, for example, the data at the central location they carry. So the data breaches happen at the central location. Data breaches don't happen at the edge devices as much as what you see on the central infrastructure. And most of these apps have become very light. If you look at, for example, super app doesn't mean that it's a bloatware or a bloated application or something like that, right? It is a mini app which can give you, in fact, the account aggregation model of what has been presented to us by the the government MeitY is that you don't as an account aggregator, as an AASP and PASP, the roles are very different. You can't even store the data. I only access your account with your consent and give information to you, and I don't store that information. So I think in that context, the data breaches and the relevance of that argument is very valid, but it is at the backend infrastructure and ensure that the data is secure and those infrastructure layers are protected. I think the second point, which is on the blockchain or a distributed application, I think it's super important because the way the kind of I just wanted to give you one small example, right? If one e-commerce transaction, for example, today it touches almost like 10 different entities, right? So when I tell my team, for example, if one e-commerce transactions a consumer attempts, and if it fails, for example, you see how many players at least know the seller in the marketplace, the marketplace provider like Amazon or a Flipkart, whatever, and then the acquiring processor, acquiring bank, then it is in players like us who provide the security and then switching, the SMS gateway provider, and then the issuing bank and the issuing processor. The 7 or almost like 10 guys get impacted if you fail one transaction. So it is a question of making sure that this many entities do their job very thoroughly, successfully, securely for one e-commerce transaction to go through for the consumer, right? And it has to happen at maybe 4 seconds, 3 seconds, because they don't want to wait. So if an SMS reaches after 4 seconds, you would have moved on. You would have closed the browser and moved on to the next purchase, or you would have gone to another site. So This is where some of the distributed technology ledger DLT kind of a solution can emerge, where you will be able to see the frictionless transaction flowing across between the consumer to the issuer and the other way, right? And today, whatever talking about the same, I think it looks to me that it is not the message getting transacted now. Even the actually hit the account of between banks will happen real time, right? So the real time payments will become real time. It's not just the message flows between the banks. So
as real as it can get, yeah. Look, we really have just 2 more minutes, and I do want to take some questions from audience. So if you don't mind, we'll take some time. But before we get the audience questions, I would ask the audience to actually give their answers to the poll that we're going to run now. So please, can we have the poll number 3? Chetan, if you're on the line, thank you. So the most crucial element in the Indian digital payment ecosystem, in your view, would be payment gateways, payment aggregators, payment hubs, or other service providers, including issuers, acquirers, payment service providers. They've converted PSP in others. Somebody will take offense there, yeah. But anyway. Let's see. It's going to be a close. I guess for once you may see others winning over everybody else by the looks of it.
You included everybody there.
Yeah. Okay, so I mean, sometimes it actually makes it's nice to actually have the others as a category to actually be the underdog to come over there. So we close the poll there. 44% people actually rate others to actually be, that's the highest rating, and I think we figured why. I think the PSPs were in there, yeah. So I guess we may have to accommodate that rating there. So we have about a minute. I can take 2 questions. People can post them on the chat box, and if there are questions, I could actually post them to the panelists here. So maybe while we're waiting for questions, if there is one prediction you want to make, Suresh, on the future, what would that one prediction be?
I think more than the prediction, Ram, I think there are 2-3 things which I think are very important for success of digital payments in the country. One is, like, I think partly Ashish touched it, is the anti-fragile architecture, right? Because today the architecture in the payment systems within banks, issuers, or on the acquiring side is very, very broken and silent. So if you are able to provide an anti-fragile architecture for scale, availability, security, and all of that built in, I think that is one of the very fundamental factor for a successful e-commerce or a e-payment transaction. The second is, I think, the zero trust network. I think the fraud will happen. It is not that you can prevent every kind of fraud is possible and things like that. I think the amount or the ability of these participants, the players, whether it is banks, the issuers, acquirers, all of them to share that fraudulent data or ability to provide that information in a common place, provide kind of a network-based consortium, data network consortium, which is very common in many other countries. Probably in India, we need to bring that because of the data privacy laws and things like that. Probably it is taking a little backseat. But if you are able to anonymize the data, but if you are able to provide that kind of a data consortium view, our ability to prevent frauds will be, a good way to sort of promote the digital payments. Okay. The third is very important. I think he touched about on the native language, right? Because I think India being a very diverse country, and we can't expect everybody speaks English. So if we are ability to do the, these, multilingual or a, native language processing, could be, or a natural language processing, whatever, yeah, in their own native language, if you're able to do the transactions, or voice-based transactions where you are able to do a voice-based authentication and make a payment, which is becoming, people who can't read and write can still do the transaction in a, like the QR code, how it has transformed like the way you have the viral video which you are talking about. I think those are few elements which is probably so harmonization of that or the standardization of that infrastructure, anti-fragile architecture, and the zero trust network or a data consortium to facilitate.
Interesting. Anti-fragile architecture is
Payment
very
industry
important.
will absolutely.
And democratization, as you're pointing out. There is a question here from Ashwin. Maybe I'll pose this to Ashish. What is your view, Ashish, on customer transactions? If charges were to be applicable for some of the easy to pay methods on UPI and contactless and so on, what will happen here?
Yeah, absolutely. I think cost to payments, I spoke about it. I think, unfortunately, the payment companies will have to focus on reducing the cost to payment, cost for payment. So, charges, I know the whole UPI related growth somewhere, the 0% MDR has a role to play in it as well, which kind of has disappointed the other important players as well. But if we have to have certain costs associated with payments, it will definitely have an impact for a cost sensitive market like India. So I think payment companies, everyone associated, will have to look at bringing down the current.
You see the cost per transaction, it's unidirectional and it is southwards, yeah?
Absolutely. Unfortunately, yes.
That is for the retail customer, but what about the corporate banking customer? Suresh, another question from Justina. This one, the last question for the session, I'll probably pose it to you, Suresh. What is the status quo? I mean, what's the status quo of digital payment in corporate banking? What's the potential for that in corporate banking? Yeah.
I think it's phenomenal. I think you also presented in your like 3 important elements like instant payments or a real-time payments and then the B2B payments. I think the corporate banking, I think the one is the size of the ticket is so high. Again, it all boils down to whether is it hitting the right account or right beneficiary, and also some of these anti-money laundering rules and things like that comes into play. So those infrastructure related to anti-money laundering or I mean, we all know when you're in a bank, when you want to receive a payment, it's not so easy. You need to go through multiple screening filters to hit the beneficiary account. So on a real-time basis, if you want to do this filtering, the compute infrastructure has to be super efficient, right? Because today, even in a retail payment where we don't do all of that, the compute infrastructure gives you or breaks somewhere, and you are able to. That's a reason still some companies do reconciliation as a software, and we're still surviving on some of that, right? So, so if you just imagine a situation where in a large ticket or a and that transaction did not reach, or it has reached wrong hands, or it has it should not have hit, but it has hit the account. So some of these are very on a real-time basis. If it has to be done, the current infrastructure is not capable, or it has to be the technology has to sort of evolve, and it has. I mean, many players have done very well, but I think a lot more to be done. And then the settlement infrastructure, right? Because today, like we talked about, the settlement infrastructure, whether it is still a T+2, people are moving to T+1, some banks attempting on a same-day settlement. Just imagine, where money reached and a large amount of money transferred from bank A to bank B and waiting for 2 days to receive the funds. It's not a very super efficient model, right? So, and people rely on still some countries, the negotiable instrument act, where, for example, Czech is still a negotiable instrument act, and probably, they penalize, right, based on the, post-dated checks and things like that. A similar kind of a model has to evolve, right? Or a digitized version of penalizing, all of that, right, has to emerge. Some of this probably is, how it has happened on the regulatory framework on the retail side. Probably these has to happen. Things are happening. That is why these DLT and blockchains and some of these are going to be, the next big technology which will enable. I mean, look at that today. Whatever we are talking about, the money flow or a flow of funds, still 80% is corporate in terms of the value, right? if you just talk about, I read somewhere one of the networks, very large networks or a scheme operator, they mentioned about $185 trillion flow, out of which only $25 trillion is retail. $160 trillion money flows on a B2B payment. So it's a huge opportunity.
I mean, it's big institutions, and obviously we are talking about serious money. I think it also comes along with it higher security and as we talked about AML and considerations that are important to keep in mind. But look, I mean, as they say, all good things have to come to an end, and I mean, I can go on. I think this is a topic that actually, I guess, we would love to actually continue the conversation, but unfortunately, we do have some time constraints. We already spilled it over by 8 minutes. Thank you again, Suresh and Ashish. It's been wonderful talking to you. Thank you, FICCI, for helping provide this platform. That obviously, we've had a wonderful time discussing, and hopefully, the audience have nice things to take away from this conversation, which I certainly did. Thank you again, Suresh, and thank you, Ashish.